Alright, y'all. This video is for anybody who is new to Market Cipher and relatively new to trading in general, who is looking for a great strategy to trade on the lower time frames using Market Cipher. And when I say lower time frames, I'm talking the 1 hour, I'm talking, the 1 hour and lower, the 1 hour, the 15-minute, the 10-minute, the 5-minute, etc. Now, Market Cipher is an amazing tool. I'm going to pull up Market Cipher B right now. And most of us, when we first got Market Cipher, we were extremely excited. We felt like we had this amazing tool at our disposal, and we were ready to jump in. And we quickly realized that longing every green dot and shorting every red dot is not a good strategy. And so what my goal is in this video is to help people who might be feeling overwhelmed, to give them a direction and a goal and a process that they can do every time they sit down to trade. And this process will help focus your vision so that when you're looking at a lower time frame, like a 3-minute, a 5-minute, 10-minute, you know exactly where you should be entering, you know exactly what you should be looking for, and you can have confidence when you enter these trades. Because there's nothing more frustrating than feeling like you're losing in an uphill battle. With Market Cipher, trading should not be an uphill battle. This is an amazing tool, and if we know how to read it and if we know how to do what it says, we will make successful trades. It's as simple as that. So my goal is to outline exactly how I would approach trading on these lower time frames using Market Cipher and also some basic technical analysis. So this is going to be a more detailed video, guys. It is going to involve a lot of concepts, and I'm going to do my best to clearly communicate these to the best of my ability. Guys, if you do not have Market Cipher, if you click my affiliate link in the description of this video, you can get a 10% discount if you use the code that is down there. Also, guys, make sure to like the video, subscribe to the channel, and share this video because I do think that this information is great, especially for new traders who are using Market Cipher who might be feeling very overwhelmed right now. Okay, when I am sitting down to trade, the first thing that I do is I strip everything off the chart. Everything, even hike and Nishi candles. I take those off and I just look at the naked chart, just the price action. And man, this is not looking very good. So I'm going to adjust the resolution here. There we go. And what I'm going to do is I'm going to start on the 4-hour time frame. I really like the 4-hour time frame because it's big enough to give us a big picture to see what's happening on the macro, and yet is small enough to show us what's happening on the shorter time frames. It's kind of a good middle of the road time frame. When I'm trading Bitcoin, I always refer back to the 4-hour chart to get my orientation. So we're going to do something called top-down analysis. Top-down analysis is basically where we open up a chart and we start on a big time frame, like the 4-hour, and then we zoom in, where we might go to the 30-minute or the 24-minute, and then we zoom in more, where we might go to the 10-minute, and then finally we go to the time frame that we're actually looking to enter and exit a trade on. And what we're going to do is we're going to be drawing levels of support and resistance. These are very important because they give us a reference point. Price action tends to find sticking points, and these sticking points often form lines, and these lines are called support and resistance. Let me give you an example. Now, a support is a place where price has trouble breaking below. So, for example, back in January, we formed this very strong line of support. You can think of support as a floor that keeps price from going any lower. Once we came above this line right here, the 30,000 level, give or take, we tried to break through that many times, but we were unable to. And that's why we would call this a support. This is the floor. Then we have resistance lines. Resistance is like a ceiling. It's a level that price cannot break above. So right here, we had a resistance level. Price really couldn't get beyond this $42,000 level. And again, right here, acted as resistance. And again, right here, this acted as resistance. Now, when price forms levels of support and resistance, it's important to remember that the price will probably return there again. Price likes to go back to places where it found good support and resistance. So what we are going to do is we are going to look at the chart and we're going to start looking to the left, okay? And we're going to say, where were some areas where price found some serious sticking points? I would mark one right here, right at the 40,800 level, right? And then I would probably mark one again right here. Another way to look at these guys are just areas that the price interacted with a lot. You want to see lots of interaction. And one more tip, don't look at this as a specific price and say $40,894.00 is the support. No, that's not what you want to do. You want to look at these as zones, as areas. So you could even take a box right here and just draw a little box around your line and say, okay, this is a zone, this is an area that price tends to go back to. And when price gets back to these areas, I'm going to become very interested in a trade because I know historically when price came to this level, there was a reaction. There was a big movement off of this level, whether it be a huge move up, or sometimes when prices come to supports, they break through and there's a huge move down. So we're going to be marking these levels on the 4-hour time chart. I would put another one right here. And I'm sorry if this is, stuff that you already know, but especially for people who are new to trading, I want to make sure people really understand these basic concepts. See, look at all the interaction price had with this line right here. So much interaction. And again, just so much interaction. And right now, we're interacting with this line again. We came up from the support to the resistance, and look at what happened. As soon as we hit the resistance, there was some kind of reaction. We were in a clear uptrend, and we stopped right here at this sticking point, this resistance area. And now it looks like we're trying to break through again. And we very well might break through again. This is why marking these support and resistance levels are so important. Because if we see that we got to this resistance and we had some kind of reaction, some kind of stick, some kind of pullback, now we can zoom in on a lower time frame and look at what Market Cipher is telling us about this candle. And if Market Cipher is giving us a clear signal that there's upward momentum, we can then assume that this is going to break out of this resistance and we might enter a long position. And I'll get into that more. So once we mark these levels on the, let me delete these red circles here. Once we mark these levels, these key support and resistance levels, we're going to zoom in more. So I'm going to quickly just mark the rest and shut up so that we can get on with the video. So let's see, put one right there. I would put one also right here. And if you want to pause the video and just look at why I marked these levels, it's because they were, very significant. We had a lot of price action and sticking points on these levels. Now I'm going to zoom in to, let's say, the 30-minute, okay? This is going to give us a more zoomed in look, and we are now going to refine our levels of support and resistance. If you're looking to trade on lower time frames, you might want to erase those levels that have less, obviously, when we're trading on the lower time frame, we are looking for price to move a lot, but let's stick within this general zone that we've been trading on the 24-minute time frame right here. Because guys, look, since Bitcoin started to have this correction on February 21st, we have primarily been trading within this range right here. Now, this is very important to take note of. If you see that for a number of days Bitcoin is trading within a specific range, okay, two specific support and resistance levels, take note of that, because it means if we get to one of these support and resistance levels, there's a very good chance that we're going to have some kind of reaction. And Market Cipher will allow us to predict what that reaction is going to be. So, we have our 24-minute. It seems that the support and resistance levels we drew on the 4-hour are very precise and they're holding up well in the 24-minute. If you notice, let's say that on the 4-hour you mark the resistance level and then you zoom into the 24-minute and you take a look and you're like, you know what, this level, there's not a lot of price interaction with this level. Maybe it might be more accurate if I moved it down to right here. Just kind of adjust your levels, maybe make new lines if you want to. Something that I like to do, guys, if you are making lines on a smaller time frame, make them a different color. That way you know what time frame that support or resistance belongs to. Now let me tell you why that's important. That's important because a 4-hour support and resistance is going to be much, much, much more significant than a 5-minute support and resistance. You can draw support and resistance lines anywhere. Like you could draw one right here on the 5-minute chart, and let's change this to a different color. We'll make it pink. A nice soft pink, because this is a nice soft resistance level that then got flipped into a support level. But, this is not a very significant level because there has not been much price interaction here. We're only looking at a 5-minute chart where there's maybe a few hours of price interaction, as opposed to this 4-hour resistance level where there have been days of interaction. The more times price has interacted with a level, the more strong that support or resistance level becomes. So now that we're zoomed in our 5-minute chart, we're taking a look here, and we might want to add some more levels of support and resistance. So I'm going to add a few more levels here. And, you know, it's okay if your chart looks a little crazy, but, you know, just add in as many as you can, because now that we're on a low time frame, it's important to have more points of reference, This is where I would open up Market Cipher, and I'm going to open up Market Cipher B and Market Cipher A. I'm just going to mark some of these levels here. I'm going to mark some of these 5-minute support levels. I would even put one, let's see. Yeah, I would for sure put one right here as well. And then right here. So I hope you guys are grasping the concept. Now, another thing to understand about support and resistance is if there's really no sticking point in between two levels, then if price breaks down, like let's say we break this support right here, this pink support, there's really no sticking point until we get down here. So we can be pretty confident that we're going to come down there. As opposed to if we had broke this support level up here, you know, our next sticking point would have been right here. So you can kind of judge where to set your take profits if you're going long or going short. So let me open up Market Cipher A and Market Cipher B, and then I'll show you how I configure these so that you can do the same thing. Market Cipher B, B, right? Yep, that's exactly what I said. Yep, don't judge. Don't judge. I know you guys are judging out there. Y'all are a whole bunch of judges. Okay, now, this is where things get really good, guys. This is where things get really good. When we are looking at our 5-minute chart or the lowest time frame you want to trade on, we are going to be looking at 3 different things primarily. Market Cipher B, our support and resistance levels, and Market Cipher A. Now the way I set up Market Cipher A is I click the little gear button, and I only use ribbon 5. So you can uncheck all these ribbons except for ribbon 5. Now ribbon 5 is part of the EMA ribbon that comes with Market Cipher A, and this specific ribbon is a 21 EMA, meaning it's giving us the average price of Bitcoin during the past 21 candles. This is very important, very significant, because it is a Fibonacci number. If you guys are interested in learning more about that, you can sign up for my course, which is available. Still, I'm only taking 50 people. It's going to be a very intimate thing. If you're interested in that, you can email me, email in the description of this video. I'm opening it up for 50 people, where basically it's going to be one giant live stream where I will give a presentation for 45 minutes to an hour and then open up the floor for Q&A, so you guys can ask me things, and I'll actually be able to hear you and answer back. But basically, sorry to go down that path there. The 21 EMA, doesn't matter what it is, all you need to know is that it's acting as dynamic support and resistance. Instead of being a horizontal line that's giving us a support and resistance level, it is a moving line that's giving us a support and a resistance level. Notice what happens every time the price touches this EMA. What happens? The price bounces off. And it's extremely significant when we come to a place where one of our support and resistance levels coincides with the 21 EMA and we get a bounce off of both. When we're looking to trade, it's all about stacking the probabilities in our favor. And the more probabilities we can stack in our favor, the more likely it is that we will win the trade. A bounce off a support level is something that puts the probability in our favor to go long. A bounce off the 21 EMA is another factor that puts the probability in our favor when it's time to go long. So right here, as we're looking at this lower time frame, we're just stacking the probabilities on top of each other. The elevating factors. You can look at trading as elevating factors and deprecating factors. Not defecating, right? We're not talking about defecating factors. Unless you are trading on the toilet. In that case, we're talking about elevating factors and defecating factors. You want to stack the elevating factors in your favor, and the defecating factors, well, you just want to throw those in the toilet. So, The next thing we're going to look, so when we're looking at our lower time frames, we're going to turn on our Market Cipher A. I'm sorry guys, I'm doing some weird stuff here. And we're basically going to be looking for times when we see either a bounce off of the 21 EMA and a support and resistance line, or the opposite, where we see price fall below a support and resistance and come below and close below the 21 EMA. Now notice something about this 21 EMA, guys. It actually changes color. And if I go to a higher time frame, I'll be able to highlight this better. But notice how it changes color. If we are in a downtrend, the EMA is gray. If we are in an uptrend, the EMA is white. Now this is a feature of Market Cipher which you can use as another elevating or deprecating factor. Like for example, right here, we confirmed above this support, we confirmed above the 21 EMA. And when I say confirm, if you guys don't know what confirm means, if you're looking at a chart and you're hearing somebody give technical analysis and they say we confirmed, that basically just means the candlestick closed. This is the 24-minute chart, and so this price action movement above the EMA and above the support, we wouldn't consider it confirmed until the candle was closed and we moved on to the next candle. Because technically, until the candle closes, it could come all the way back down here. We don't know yet. That's why we're waiting for it to confirm. So here we confirmed over a support, we confirmed over the EMA, and our EMA turned white. So those are three elevating factors that are in our favor. Once we look at what's happening on the chart with basic technical analysis, Market Cipher A. I consider Market Cipher A part of, basic technical analysis because it contains EMAs. Wow, look at this. Look at this. We are doing some really cool stuff here, guys. I wish I had made this video a little earlier because I could have actually shown some really nice live examples of making a little scalp. But that's okay. You'll still get the idea. Now we look at Market Cipher B. What we want to do is we want to combine. It's called confluence. Confluence is when you have multiple elevating factors that all line up telling you enter this trade. If I'm looking to trade on a lower time frame, the confluence that I'm looking for is this. If I see something good on the chart, we confirmed over a support, we confirmed over the moving average turned white, then I'm going to go to Market Cipher and I'm going to say, okay, what is Market Cipher telling me about the momentum of the price movement? Because think about it, guys, just because we confirm, watch this, and this is very important, just because we confirm over resistance and support, and just because we confirm over that 21 EMA does not mean we are going to go up in price. This is very important. Look at what happened here. We were above the 21 EMA. We had a huge giant blue candlestick over a resistance. You might have thought, oh, is this a good time to enter? We come back down. We shoot back down. What we want to do is we want to look at Market Cipher B to know what is it telling us. And here's what we're looking for on Market Cipher B, guys. We are looking for anchor waves. These big, thick, juicy, delicious anchor waves that have some big green dots down here, okay? That's what we're looking for. We're looking for anchor waves with these big green dots. The more, the better. The more, the better. And then what we are looking for is we are looking for a money flow crossover, and we are looking for a trigger wave. A trigger wave, okay? Now, guys, this was actually a really great trade to make earlier if you got in on this trade. And, believe it or not, I actually did get in on a trade right here. Right here. And the reason for that was because I saw a whole bunch of things stacking up in my favor. I saw everything happening here on Market Cipher A and the chart and the support and resistance lines. I saw that we had these anchor waves down here. And then I saw that the money flow index had curved up. And as soon as we printed this tight trigger wave where I could draw a clear direction upward, this is where I decided to enter my trade. Because look at what happened when we printed that trigger. We confirmed over the 21 EMA, which was white, showing we were in an uptrend. We confirmed over this line of resistance right here. And Market Cipher B was telling us money is coming into the asset. Momentum is moving upwards. And this is very important, guys. I want to talk about Market Cipher B on the lower time frames because I feel like a lot of people get confused and they just look for a green dot. It's more than just looking for a green dot, guys. We need to stack these things in our favor. We can draw on Market Cipher B to kind of see the general flow of the market. If you just take your brush tool and connect all the red dots together, right? I'm connecting the red dots together. That's what I'm doing, red dots, in general. You know, I'm not hitting every single one, but we can see a clear time when the red dots stop printing above the zero line, right? When the red dots stop printing above the zero line, in general, notice this. This is important, guys. We have red dots printing above the zero line. This is the zero line right here. When the red dots start printing exclusively below the zero line, with a few exceptions, okay? This is another area. This is when we begin looking for a long, because we know that momentum has come down and what goes down must come back up. So when we see the red dots forming below the zero line, when we start seeing these bottoms printing, now we're going to start looking for money flow crossing back up and a trigger wave on Market Cipher B. And that's where we are going to look for our entry, because that is going to give us the most assurance. And the way I trade these lower time frames is I am stacking all of these things in my favor. When you're trading, you want to be extremely confident that the trade is going to go in your direction. If you are ever uncertain, and this is a word of advice, especially for new traders, if you are uncertain, do not enter the trade. It is better to sit out on the sidelines and miss out on a gain than to be uncertain and to be in a loss. When it comes to trading, the most important thing, guys, is the preservation of your capital. And the reason for that is because your capital is the only means by which you have to make money. If you diminish the amount of capital that you have in your trading account, you are diminishing the ability that you have to earn money trading. So a lot of new traders get very excited about making money. They get very excited about using leverage. And don't get me wrong, I'm sure there are people out there who started with $1,000 in their trading account. They used leverage, they got lucky, and they flipped that account, and now they have like 100K. I know that that's real. But for most of us, guys, that is not going to happen. For most of us, we're going to lose all our capital, and then we are going to lose our ability to make money trading. Instead, what you should do is you should start trading with a very little amount of money, just to practice, just to get the hang of this, guys. This is a skill. Looking at Market Cipher B is a skill that takes time. You need to learn how to read it. You're not just looking for dots. You're looking at this thing as an entire entity. It's telling you the flow of the market. So, to sum up what I said, and I'm sorry to go off on that tangent, guys, but to sum up what I said here, we're basically looking to stack elevating factors in our favor. We start by looking at the naked chart, and if we see something that looks interesting, for example, right here, down here, right? We saw that we came up and we crossed above the 21 EMA. We came and we confirmed above this support level. What is Market Cipher B telling us, though? Market Cipher B is not telling us to enter a trade. Market Cipher B has the money flow index in the red, and we're starting to come up, okay? We're starting to come up, and we know what happens when we come up to this level. That means we're going to start printing some red dots. We don't want to enter a scalp if we're about to print a red dot up here. Don't FOMO in because you say, oh, it's going up, it's never going to come back down. No, it is going to come back down. It came back down right here, and this would have given us a very good entry. If you can see that Market Cipher B is looking like it's about to print a red dot, just sit out and wait. If you see the money flow index in the red, don't long. Don't long. Wait until you see that clear crossover. This clear direction, now the green trigger waves are starting to print higher and higher. Remember, the red trigger waves were printing lower and lower and lower, and now things are starting to come back up. We can see the clear down, and we know this is a bottom here. Even just drawing on Market Cipher, even if we didn't have these big dots here, we would be able to tell, okay, we're hitting a bottom. It's start the time looking for a long. As soon as we have that money flow crossover, as soon as we confirm above this resistance level, as soon as we confirm above the EMA, which is white, as soon as we get this trigger wave, boom, that would have been my entry. And now what do you do? Now that you've entered, what do you do? Well, you would set your first take profit at this first resistance level that you had already marked out. Now, what about your stop loss? Where would you put your stop loss? Well, I always put my stop loss below the 21 EMA. And if I'm in a shorter term trade, I would use a tighter stop loss. So maybe put it right here to start. Okay, you want to give yourself a little playing room. But in general, you should be able to just take your stop loss and keep it under the 21 EMA all the way up. And here's why. Remember, the 21 EMA is a dynamic support level. So if you're in a short-term trade, right, and price is moving up like this, and then all of a sudden below that 21 EMA, you can rest assured that you were wrong and your analysis was wrong and you need to get out of that trade. So if you always keep your stop loss underneath that 21 EMA, you should be good. That will make sure you don't have a big loss if you are wrong. And then what you can do is you can basically just keep that stop loss under the 21 EMA and ride this thing up. And eventually your stop loss will move into profit. As far as taking profits goes, I would have set my first take profit level up at this resistance because this was a resistance level that price had gone to many times in the past. So I entered right here, entered a long position right here on this candle. I set my stop loss right here, and my first take profit was right here. It would have given me a almost 3% gain right there. Now, once I got here, I took out some profit. I took out a portion of my profit, 50%. And then what I did was I just moved my stop loss below this 21 EMA, right about here, right? And now my stop loss is in profit. And then I took a little bit more profits out when we hit this next line of resistance, which was 48,573. And then again, I just move my stop loss up, and then I eventually just exited the whole trade because I got nervous. I think I got nervous on this purple candlestick. See, guys, it happens to me too. I traded with my emotions, which is wrong. But I got nervous on this purple candlestick. I'm like, all right, I'm taking my money. But if I had just, kept my stop loss underneath this 21 EMA, I could still be in this trade right now. And it looks like, we might actually confirm above this resistance and come back up even higher. We don't know. But that's the next thing I want to talk about, guys, is how do we know? How do we know if we are going to confirm above a resistance level or not, or drop below support? It all goes back to using Market Cipher B. When we look at this here, when we dropped below the support level, okay, right here, for example, let's say you were looking to trade right here. You were interested. You were interested because you know that historically this is a sticking point. It was a support once. It was a support twice. It was a support 3 times. Then it became a resistance. And now it's acting as a resistance again. And we get here and you're like, what is the price going to do? Is it going to break above this resistance level? Are we going to have a breakout to go long? Or is it going to bounce back off this resistance level and we'll have an opportunity to go short? Well, look at Market Cipher B. What is it telling us? As soon as we come to this resistance level, we print a red dot on Market Cipher B, and we can kind of just draw the overall downward movement of Market Cipher B. The money flow has just crossed from the blue into the red, and we have this nice red trigger wave right here. So we know without a shadow of a doubt, with this red trigger wave right here, we are not going to break up past this resistance. So if I'm going to enter a trade there, I would not look to enter a long. I would look to enter a short. Now go through charts, guys, historically on all time frames. Draw these lines of support and resistance. Put on that 21 EMA, ribbon 5 on Market Cipher A. And just look at all the places where there were potential trades to make at all these levels of support and resistance, and then go down and look at Market Cipher B and say, what was Market Cipher B telling me? Look at this right here. Right here. At this 52 level, we just had this huge run up. How many people do you think FOMO'd in right here after this giant candle? How many people do you think FOMO'd in? They're like, that's it, guys. We're going back to 60K. Everyone get in. What was Market Cipher B telling us right here? Market Cipher B was printing a red trigger wave. The money flow index was in the red with no sign of curving up to the blue. In fact, we had just curved out of the blue back into the red. So we would have known for sure when we saw price coming up to this resistance level, this is not a time to long. This is a time to look for a short. And then you enter your trade. You put your stop loss above that resistance level because you know we're rejecting off of that. And then, you would just move your stop loss and take profit on the way down using the 21 EMA. That's what I like to do. I encourage you guys to go through this on all time frames. This is the 24-minute chart, but do it on the 5-minute chart. Do it on the 1-hour chart. Look at this right here. If we turn on our 21 EMA, we had some really great trade opportunities right in here. This was a really great one, right in this area. Because what we had was we had a very clear direction on Market Cipher B, which was we were coming down. We were coming down. Whenever we're coming down on Market Cipher B, like I said, and you see these red trigger waves printing below or near the zero line, that's when you're looking for a long. When money flow index is in the red, you're not entering a long, you're looking for a place to enter a long. And ideally, you would want to enter that long as soon as the money flow index crosses back to the blue, or right when it's about to cross back to the blue. So right here, we have some really good confluence. What do we have? We have a candlestick that comes up and confirms over this resistance level. Okay, and this has been resistance for a long time now. We have the confirming over the 21 EMA. Okay, and then we have Market Cipher B clearly coming down, clearly printing some nice anchor waves down here. And then we see the money flow index curving up to the blue, and we're getting some nice tight green trigger waves right in here, right around that zero line. That would have been a great place to enter. And if you didn't want to enter here because you were too concerned, you didn't have enough confirmation, you could have entered right here after the money flow already crossed into the blue and you got this next trigger wave. That still would have been a really great trade. Now I want to highlight something to you guys. This is very important, okay? Look at all these times where we crossed over a support and resistance line, and we crossed over the EMA, and the EMA was white and not gray. If you were not using Market Cipher B, you would have entered right here. You would have entered right here. You would have entered right here. You would have entered right here, and those all would have gotten stopped out. Price came up, came back down, right? How do we know which ones to enter and which ones to stay out of? It's Market Cipher B. That will tell us. Right here, we can see that these are not the ideal places to enter. We're looking to enter when Market Cipher B comes down, and we're looking to enter right when it crosses back up. And you can kind of just look every time this happens, and we have this money flow crossover, and we have this clear downward momentum on Market Cipher B, and then it starts to shoot back up. When it starts to shoot back up, that is when you want to enter. And the things we are looking for are not just dots. We're looking for a money flow crossover. We're looking for these big anchor waves with the big green dots, and we're looking for lower highs to print on Market Cipher B. So we're going to combine all these things together, guys, and this is how we're going to enter into the best trades on these lower time frames. For the higher time frames, it's much easier to enter good trades because higher time frames always give more reliable signals because they're dealing with much more data over much longer periods of time. And so it's easier to trade the 4-hour, 24-minute strategy because those signals are very clear. When we come down to the 5-minute time frame, this is where we need to look at multiple things. We can't just look at Market Cipher B alone. First, we need to have the first layer of TA up here. Then we confirm everything we see up here with Market Cipher B. And if you do that, guys, you will have a lot of success trading. I really hope this video helps. If you guys found this video helpful, please make sure to like and subscribe to the channel. If you don't have Market Cipher and you would like to get it, if you use my affiliate link, I will get a small commission from that, and I would be very thankful and grateful for that. But you guys can also get a 10% discount if you use my coupon code. Also, guys, I am offering a course that is going to be live streamed in a private Discord for up to 50 people. I have about 20 that have already signed up and have confirmed. They've confirmed over the support line, and it's official now. If you're interested in that kind of environment, a small group where you can see me on a live stream, talk to me, and I can answer your questions, send me an email, and I will send you information on how to sign up for that course. Thank you guys, and God bless. See you in the next video.